Great. Thanks so much, Sean. Hello, everyone, and welcome to the PRAC Budget-Based Rent Adjustment, or BBRA, webinar. As I said, my name is Harris Engelman, and I will be delivering today's presentation alongside my colleague, Belinda Koros. So I am a Senior Housing Program Specialist for the Program Administration Office in multifamily, which that's the policy office within HUD's Office of Asset Management, also known as OAM. I've been at HUD for 3 years, and I focus primarily on contract renewal policy. And presenting with me is Belinda Koros. She is the Assisted Housing Oversight Division Director within OAM in multifamily housing. She has 35 years of service with HUD, of which 31 of those years she worked on processing budget-based rent adjustments on a routine basis in HUD's Arkansas and Jacksonville offices. Next slide, please. Great. So as you can see on the slide, here is the agenda. So we're going to be covering the objective, what the webinar covers, an introduction, steps for submission, tips for budget completion, supportive services and service coordinator budgets, next steps in completion, cover any questions at the end, and then close out. And just as a note, you can put questions in the Q&A, but we're not going to touch the questions until the Q&A at the end, which will be over the last 15 minutes or so. And I see there's a lot of action in the chat around speaking. So just make sure to turn on your microphone. And I guess you probably can't hear me if you're writing that in the chat, but I digress. Great, and we can go to the next slide, please. Okay. So the objective of today's webinar is to provide attendees with practical guidance and direction in preparing submissions for budget-based rent adjustments for Section 202 and 811 PRAC properties. So those are contracts that are project rental assistant contracts. Next slide, please. Great. So today's webinar is going to cover 3 main topics. The first is the required components of a BBRA submission package. The second is an overview of the PRAC calculation budget worksheet. And the third is creation and review of service coordinator budgets. And in order to have your budget-based rent adjustment approved by HUD, it's really important to understand what needs to be included in the submission package. The PRAC calculation budget worksheet and the service coordinator budget are 2 documents that are included in that package. And those are 2 places where we really often see mistakes made. And that's why we wanted to focus on them today. So now I'm going to kick it off and give it to, hand it over to Jess Jackson. And she's the Deputy Director of the Office of Asset Management. And she's going to deliver some opening remarks. So after you, Jess.
Thank you, Harris. Welcome, everyone. Thank you for participating with us today. First, wanted to just start out with giving a huge thank you to Belinda and Harris for their extensive work in creating this session for you all today. So now I just want to provide a little bit of background of why we are hosting this webinar for you all. The Office of Asset Management oversees the operations and coordinates with the regional and satellite offices for all multifamily programs. One primary responsibility is that we work with Congress to ensure that the department has the funding available to continue to renew the PRAC contracts upon expiration, provide policy regarding the programs, and to oversee the payment process through tracks. The Section 202 PRAC program provides affordable housing to very low elderly tenants aged 62 and older, and Section 811 PRAC similarly provides affordable housing to very low individuals with serious and long-term disabilities, including physical or developmental disabilities, as well as mental illness. These are some of the most vulnerable populations in our country, with an average income of $15,200 per year. These projects are located across the country in just over 5,500 projects, serving approximately 150,000 households, most of whom are required to pay 30% of their income in rent and utilities, with the balance of the operating rent paid by the PRAC contract through the monthly billing process through tracks. You can see the location of these projects at the following links that I believe will be provided in the chat. And also at the end of the session, there will be a recording with the links as well. The budget-based rent adjustment process is an annual evaluation that ensures that these projects have funding available to cover the eligible operating costs, and specifically for the 202 projects, to also provide supportive services and service coordination efforts. The department relies on owners and management agents to provide the project's operating budget and supporting documentation to ensure compliance with the regulations for these programs. Over the last few years, we've been working to improve the BBRA process through issuing the two following notices. Housing Notice 22-5, which updated the renewal of expiring PRACs for 202 and 811 projects, and also allows for the 5-year term for 202 projects based on available appropriations. The implementation of the 5-year term has been phased in over a 3-year period and will be completed in 2025. And in 2026, we will issue guidance for 811 projects to also have 5-year terms. The second notice that we've issued is Notice 2023-2. This notice explains the purpose and allowable uses of supportive services funds and the requirements and process for approval as part of the annual operating budget. We're also very busy working on updates to the Handbook 4350.1, also known as the Multifamily Servicing Handbook, specifically Chapter 7, which covers the BBRA requirements. We expect to have the revised chapter available for public comment in the near future, and please look for this on the multifamily drafting table at a link that will also be provided in the chat and later in the recording as well. Today's session is designed to provide you with practical guidance that you can implement into your operations. Your partnership in providing timely, complete packages and coordinating with the HUD regional and satellite offices is vital in HUD's ability to continue to provide affordable housing options to the elderly and persons with disabilities. Thank you all so much for joining us today and participating, and I'll pass it back over to Harris. Thank you.
Great. Thank you so much, Jess. Really appreciate that. So now we are going to get into the details of budget-based rental adjustments for PRACs, now that we had that great introduction. So as everyone knows, BBRAs are essential to the financial operation and compliance of Section 202 and Section 811 PRAC projects. The Section 202 and Section 811 programs provide eligible nonprofit developers with capital advance funding to construct, acquire, or rehab multifamily properties for eligible families. These PRAC funds are used to cover the difference between the tenant's contribution towards rent and the HUD approved rent, both of which are used to operate the project. For Section 202 projects, operating expenses include the cost of employing a service coordinator and HUD approved supported service expenses up to $15 per unit per month. The HUD approved cost to operate the project is established through the annual submission of the project's operating budget. Next slide, please. So as I'm sure everyone knows, the cost to operate a project can go up and down over time. And as a result, project owners can apply for rent adjustments, so budget-based rent adjustments or BBRAs, to account for these fluctuations. As I'm certain many of you have already experienced, there are often challenges in preparing the paperwork that's required to receive one of these rent adjustments. So the property might experience insufficient initial rents that result in budget shortfalls. Owners and management agents often find the timeframe requirements for document submission are confusing. It can be difficult to coordinate the budget process between service providers and property managers, and they may have different priorities. All these situations can be further complicated by a loss of institutional knowledge due to staff attrition and staffing changes. From the HUD account executive side, they can often struggle with large workloads and need to manage multiple priorities. This can often be compounded by late, incomplete, or incorrect submissions that they have to respond to. They may also have trouble in completing documentation due to a loss of historical knowledge from senior staff retirements and staff attrition. Next slide, please. So what is a budget-based rent adjustment or a BBRA? So when we're talking about BBRAs, what do we really mean? BBRAs are necessary when current rent levels are not sufficient to cover anticipated or unavoidable increases in operating costs. Or conversely, when operating expenses decrease and there's surplus cash. Section 202 PRAC and Section 811 PRAC owners may request a rent adjustment based on an evaluation of the project's operating budget. Next slide, please. Great. Who prepares a BBRA and when? So BBRAs are prepared by owners, management agent staff, and or site staff. And the timing of BBRA submissions is subject to the following. So first off, they must be submitted 120 days prior to the anniversary date of the PRAC contract. And as just indicated, HUD is currently implementing 5-year contract renewal terms for Section 202 PRACs. You can also submit a BBRA to HUD each year of the 5-year contract. HUD can renew at the current rent if the owner fails to submit all necessary documentation for a rent increase. And renewal contracts may be issued to owners with no change in current rents when necessary to avoid a prolonged lapse of the PRAC contract. And in the event that you don't need a rent increase, you still need to prepare a budget and maintain this on site 30 days prior to the PRAC contract anniversary date. In special situations, rents can be adjusted at a point in time other than the project contract's anniversary date. This includes during a RAD conversion or if the project's operations are in jeopardy due to a substantial, often unexpected cost increase. Finally, owners must submit a BBRA when a project's PRAC is expiring. Owners must submit an operating budget on HUD Form 92547A, frequently called the budget worksheet, for all projects with an expiring PRAC. Okay, next slide, please. Great. So why would a property need a rent increase and would it impact the residents? A property needs a rent increase in situations when the property doesn't receive enough rental income to cover property expenses and reserves. The property will also need a rent increase in the event that it cannot keep up with its capital needs. For example, in the event that a property's systems, appliances, and other capital needs are becoming obsolete, the property will need additional operating funds to cover increases to deposits to the property's reserve or replacement account. Also, really important to emphasize that owners can rest assured that a property rent increase will not negatively impact most residents. In units covered by a PRAC, the tenant pays 30% of their monthly adjusted income towards rent, even if it exceeds the contract rent amount. A rent adjustment will not change the amount of money a tenant pays towards rent. In fact, the tenant portion of the rent only increases if the tenant household has a change in income, deductions, or family composition. Next slide, please. Great. So let's talk about some important guidance associated with property development. So there are several important guidance documents associated with PRACs. You can refer to these documents for key information about rent adjustments. And these include on your screen the Capital Advance Regulatory Agreement, Housing Notice 2022-05, which is on renewal of expiring PRAC contracts, the original contract, the PRAC renewal contract, Chapter 7 of HUD Handbook 4350.1, which as just mentioned, is going to be revised soon. And when that is revised, it will likely be a different chapter number. So we will make sure to send that out when that does happen. Currently working on that right now, so can't give an exact timeline, but it will happen soon. The management certification, and then finally, notice 2023-02, and that's a notice on supportive housing for the elderly. Okay, next slide, please. Great. So now moving over to PRAC renewals. So it's really important to note that HUD will adjust properties operating expenses and correlating contract rents annually on the first day of the month in which the anniversary of the contract renewal amendment falls. In order for adjustments to be approved, they must be requested by a property's owner and be in line with all of HUD's established procedures. Great. So now I'm going to hand it over to Belinda to talk about BBRA submission.
Good afternoon, everyone. So the next portion of the training will cover the budget-based rent increase submission process, and we will go on to the next slide, please. Sorry, my mouse is not cooperating. I'm getting it there. Okay, so there are three main steps to submit a budget-based rent increase to HUD. First, the owner or the agent compiles all the necessary submission documents. Second, the owner or agent submits these documents to HUD for their review. And finally, during the review, HUD will perform the rent calculation. Next slide, please. The submission documents for the package include the budget-based rent adjustment must include items outlined in the list, including a cover letter, budget worksheet, an explanation of supporting documentation for line items, a payroll analysis, itemized list of expenses, a copy of your notice to the tenants, a copy of the comments from the residents and the owner evaluation of those comments. Owner certification of the proper notice to the tenants was provided, an executed copy of the owner's certification of purchasing practices and reasonableness of expenses, a signed request for an increase in the reserve replacement deposit amount if you're requesting an increase, and a 20-year reserve replacement analysis, comprehensive needs assessment, CNA, and a utility allowance analysis. The following slides will highlight the best practices for completing some of these documents in the list. Next slide, please. First, we'll cover the budget-based worksheet, also referred to as HUD Form 92457A. For this part of the presentation, we will use a budget and an Excel rent calculation tool that HUD developed, in which the PRAC rent calculations are included. We use this tool. The use of this tool is not mandatory. However, the worksheet submission will meet the requirements to submit the required HUD 52547A budget worksheet. So if you submit the Excel worksheet in replacement of the form, we will accept that. There are numerous benefits to using the electronic version. This tool eliminates the calculation errors and provides identification of accounts where there has been an increase of 5% or $500. It also assists the owner and agent in ensuring that all required documentations are included. The tool calculates approved rent amounts and assists in ensuring compliance with HUD Handbook 4350.1, Chapter 7, which this will be Chapter 25 in the new handbook once it's revised. Next slide, please. So here's the first image of the Excel spreadsheet. And can you make it just a little? Well, I guess we can't make it bigger here, but we're going to show you the worksheet in Excel, so you'll be able to see it a little bit bigger. The budget is the first worksheet of the budget and rent calculation tool. This slide includes a partial image of the worksheet, and let's take a closer look. So now we're going to go to the electronic version. We are going to provide you this Excel worksheet on the training page where the PowerPoint's going to be provided and our frequently asked questions and links to documents. So you will all have access to this Excel spreadsheet at the end of the training. Okay, so in the this worksheet has been protected, so everything in blue is protected to prevent anyone from inadvertently writing over the formulas. The cells that require input from the owner or the agent are colored in white or light orange. All of these cells that are yellow are also protected. All of the budget input is done in the budget worksheet. The values are automatically moved to the calculation worksheet, which we're going to go through at length today. And HUD will complete this calculation worksheet will be pre-populated from the data on the budget worksheet side, but HUD will complete the calculations. The owner's proposed budget figures are automatically moved to HUD's working column, which is column J in the budget worksheet. In this column, the project manager can make adjustments and annotate comments in column K. So you see in column I it's telling you what the allowed amount of 5% or $500 is, and then the approved amount. Automatically, that column J is going to give you that 5% number, and then HUD can make adjustments in column K. Next, so now let's go back to the slide deck. So the budget format requirements include the following. It is required that the budget be submitted to HUD in the proper format per Appendix E of the Industry User Guide in the Financial HUD subsystems. Appendix E data definitions for the audited financial statements. So what this document is what REAC has issued related to the HUD chart of accounts. And owners are required to use this HUD chart of accounts. This document provides standard definitions for all annual financial statement elements to the multifamily housing industry in order to facilitate the consistent review and analysis of annual financial statements across the multifamily housing programs. Appendix C also includes HUD's chart of accounts, which must be used by all projects in their monthly accounting work. Next slide, please. So for some budget tips, as I mentioned earlier, there are 3 main columns in white on the budget worksheet. And you want to go ahead and show the worksheet, Becca? Column C is the property's statement of profit and loss from their last audit. So the first column in column C is the last audited financial statement. In column D, it's the current fiscal year to date. So as you prepare your budget, you probably aren't at the end because you're going to submit it 120 days prior to expiration or renewal. And so you're probably only part way through the year. So in this example, we're at 6 months. And finally, column E is for the proposed budget. So these are the entries based on the property's current expenses and anticipated needs, increases or decreases in the particular categories for the next year. Next slide, please. There are 4 main operating budget categories for PRAC property data entry on the budget worksheet. These include income, routine expenses, taxes and insurance, and other expenditures. The 5th category that is on the budget worksheet is financial expenses, and it does not apply to 202 and 811s because they cannot have any debt. In the income category, enter your property's current rental income based on the rent potential that's on the existing rent schedule. The financial revenue and other revenue on the and also financial revenue and other revenue on the worksheet. The total revenue will assign with the project's last approved rent schedule, the HUD form 92458. Routine expenses include administrative expenses such as site staff salaries, office supplies, utility cost, operating and maintenance cost. And taxes and insurance category includes real estate and payroll taxes, property and health insurance, and miscellaneous permits and licenses. Finally, the reserve for replacement deposits fall beneath the other expenditures category. Next slide, please. So in rental income, this table details all of the different potential sources of rental income for a PRAC property. Some of the main sources of rental income include rent revenue and tenant assistance payments. Rent revenue encompasses all of the rents received from the tenants. Tenant assistance payments are the subsidy payments from HUD. Any changes in addition to rent require HUD's prior written approval. Any charges in addition to rent require HUD's prior written approval. So let's take a look at the rental income fields on the budget worksheet. So we're going to switch over to the Excel spreadsheet. Okay, so in account 5120, we have the gross rent potential, and 5121 is the tenant assistance payments. generally, 202 properties and 811 properties don't have a lot of other sources of income. Occasionally, if you're in a large metropolitan area, you may have approved garage or parking space income. And you could also have account 5193, special claims revenue, if you had a vacancy and submitted a special claims request. That's what we typically see. So next slide, please. Okay, so the next section is vacancies. And this table details all the different potential vacancy losses for a PRAC property. When rentable space in a property is vacant, owners incur losses that are subtracted from income. So let's take a look at the vacancy fields on the budget worksheet. But you should note that for PRAC properties, 202 and 811 PRACs, under account 5220, the amount for vacancies is always budgeted at $0. This is in Handbook 4350.1, Chapter 7. So generally, this section, where is in column C, you're going to include your last the amount of vacancies on your last financial statement, and then in column D, you would include year to date. But then in column E, you would budget at $0. Because with the rental assistance, we anticipate that you're going to be able to lease all of your units. Next slide, please. Okay, service income and financial revenue. This table details the potential sources of service income and financial revenue for all PRAC properties. If the property receives outside contributions for service coordinator or supportive services, those costs should be listed under account 5300, nursing home, assisted living, ward and care, or other elderly care, COOP, or other revenue. That's generally not what we see in a 202 property. Generally, the service coordinator is actually the source of that cost is coming from the project rent. So unless you are receiving funds from outside to help cover the cost of a service coordinator, you would not have an amount in account 5300. And the investment from your reserve for replacement account would be displayed under account 5430. And if you have residual receipts, that are 5430 for residual receipts and 5440 for reserve for replacement. And if you have any additional interest, it would also be listed in 5410 for your operating account. You want to take a look at that on the spreadsheet. You've gone too far down, so go back up to the top. It's above administrative expenses, right there, right below vacancies. There we go. So account, in this project, 5440, we had $14 worth of interest from the reserve for replacement account, and they were budgeting $15. But what you should note is that interest from the reserve for replacement has to stay in the reserve for replacement account. So it's not actually going to be added to income that you have available to pay operating costs, and as far as the budget process and review is concerned. Okay, so we'll go to the next slide and start talking about expenses, the administrative expenses. So as we begin to discuss the expenses of the project, it's important to note that owners and agents should take great care to make sure that expenses are properly classified. Misclassification errors cause errors and complication in the budget review process. So this table details, we're still on other revenue. So apologize for that. On other revenue, that's what you're seeing on the screen. If you have a laundromat, laundry and vending in account 5910, 5920 would record tenant charges. Those tenant charges are not something we budget. We count as income against the budget, but you do display what the amounts were in column C and D. And then if you are fortunate to receive any gifts, they would go in 5970. And then any miscellaneous revenue, you would need to provide some explanation of that. So next slide, please. I think then we'll get into administrative expenses. Yes. So this table details the potential administrative expenses for PRAC properties. They include the cost associated with conventions and meetings, management consultants, advertising and marketing, other renting expense, office salaries, and at a minimum, the budget amount for training should be sufficient to allow one person for each functional area to attend a minimum of one project-related training session per year. As a rule of thumb, for most projects, a reasonable training budget would not exceed the greater of $5,000 or 1/2% of gross rents. And this is found in Handbook 4381.5, Chapter 6, Paragraph 6.38C. So that's like the max amount of that you would include in conventions and meetings on account 6203. So let's take a look at the administrative expenses on the budget. All right, so this project budget had $29 of conventions and meeting actual cost on their last audit, and then $187 for year to date, and they were only budgeting $30. So that seems like a pretty slim budget for training. So we would like you to look at your actual cost. Generally, we don't include consultant costs for management agents in a budget, so that would probably be a cost that would be disallowed. And in this case, I don't think it was allowed. So they had other renting expenses, office expenses, and office and model apart. Let's see, management fee. Sorry, 6320's management fee, manager superintendent salary, 6330. Then we get down to the bookkeeping fee and miscellaneous administrative expenses. No, that's zero. That's good. Auditing expense and bookkeeping fee. All right, so let's go on to the next slide. A little bit, some additional administrative expenses, office expenses. A lot of times we'll see some of those office expenses end up down in miscellaneous. So we'd rather you put them in account 6311 as opposed to miscellaneous expenses like postage and office supplies. If you have a rent-free unit on your property, or the final table of administrative expenses include the rent of the unit provided to a manager or other site staff, legal fees incurred on behalf of the project, audit expenses, bookkeeping fees, and bad debts. And when we started talking about the budget itself and we talked about the Appendix E, this description that's in the right column here is what's in that Appendix E. So it's a good reference point for you. Okay, so you want to take a look at the budget worksheet one more time for administrative expenses. I think we've covered most all of them. All right. And as you can see, in the column H on the worksheet, there are 4 areas in administrative expenses that are highlighted as a cost of increase of more than 5% or $500. And in the column I, it's calculating what that 5% change would be. So this helps the reviewer to know where you should be providing that description of any increase from the last audited financial statement to your budget amount. Which line items you need to provide the HUD reviewer with an explanation of why there was an increase. Okay, so let's go on to the next slide. right, so utility cost. The utility expenses for PRAC project can include project's oil, electricity, water, gas, and sewer costs paid by the property. This does not include utility expenses covered by the tenants in individually metered units. Let's take a look at the utility expense fields on the budget worksheet. Okay, so this is an area that generally is, the increases are not large. They're generally, within that average increases, although there are 3 of them, so they are exceeding the 5% by just a little bit. So that's pretty self-explanatory. We'll move on to operating and maintenance expenses. So additional operating and maintenance expenses include on-site security personnel, HVAC repairs, maintenance, snow removal, and vehicle and maintenance equipment. And I think I'm a slide ahead. Sorry about that. PRAC properties have operating and maintenance expenses that include maintenance supplies, maintenance contracts, garbage and trash removal. So let's take a look at those maintenance expenses on the budget worksheet that we have. But you should note that the account should not include reserve for replacement or capital items. So if you, under your contracts and supplies number, the amount you are budgeting in those 2 line items should not include anything that would come from the reserve for replacement account. That would be separate. You shouldn't be budgeting that in your operating budget. All right. And this is where, we would see increases. As your property ages, your supplies and your contracts cost will probably increase as you have more maintenance cost needs over time. So let's go back to the next slide. And this is where we will have additional maintenance cost for security payroll, rent-free unit, possibly, but typically not in a 202 or 811. Heating and cooling repairs, HVAC, snow removal, vehicle and maintenance equipment, which typically 202s and 811s don't have vehicles, but occasionally, and any miscellaneous operating expenses and maintenance expenses. Okay, you want to go back and check these out on the worksheet? All right, so this project had an increase in their heating HVAC from 8,887 up to 9,331, which is a normal expense increase we would see as the properties age. So the next section of the budget is taxes and insurance. Taxes and insurance costs that are associated with PRAC properties include real estate taxes, payroll taxes, property and liability insurance, your hazard insurance, fidelity bond insurance, workers' compensation, health insurance benefits. And so we will take a look at that over on the worksheet. HUD is very aware that your property and liability insurance costs have been going up dramatically at your properties. And so this is definitely where you need to include those costs to be covered by your next rent increase. And if you have any miscellaneous taxes, licenses, permits, or insurance under 6790, you just need to provide some supporting documentation for that. Okay, so as we talked earlier under the financial expense section that was just on the screen, that's blank on a PRAC property because there are no debt service. So the next line item is service expenses under account 6900. And this is where for the 202 projects where we would put the service coordinator and the supportive services of up to $15 per unit. So for PRAC projects with should detail the supportive services cost and service coordinator expenses under account 6900. This will include the total amount of the service coordinator 1-year budget worksheet, plus any amount requested for the supportive services up to $15 per unit per month. HUD regulations make up to $15 per unit per month available as a provision of supportive services for PRAC properties. This $15 cost must be proactively incorporated into your PRAC property budget. And you also need to have a supportive services plan to go with it, to tell HUD how you're going to spend those dollars. So let's take a look at that on the budget. And I think we're looking at an 811 on the budget. This project that is our example is an 811, so it does not have a service coordinator amount under a 6900. But if it were a 202, that is where you would put it. And then right underneath that, before you switch off this page, is the reserve for replacement deposit required amount. So in this case, there was no increase in the reserve for replacement requested because the amount in column C and the amount in column E are the same. But if you were requesting an increase, you would put the increase amount in column E here, and then you would have that additional supporting documentation of a comprehensive needs assessment. Okay, so let's go on to the next slide. So some of the common misclassifications that HUD sees when they review your budgets, over the next few slides, we're going to detail these common issues to help maybe prevent them from going forward. So we see issues with budgeting for vacancies in the worksheet. 202s and 811 PRAC properties cannot have a vacancy allowance. The revenue incurred for investment of reserve for replacement and residual receipts should not be counted toward operations. Do not count the tenant charges as other revenue, since this amount fluctuates from year to year and is not guaranteed. It should not be included as income. You're going to list it as what you're in column C and D, the actual amounts, but as far as budgeting for that, you would not. When budgeting for conventions and meetings, use the general rule of thumb and only budget for not to exceed the greater of $5,000 or the amount of 1% of gross rents, based on the training that you are anticipating to receive in the next year. For management fees, do not use a per unit per month amount in your budget worksheet. You need to use the percentage of management fee based on rent collections so that you accurately identify the cost of the management fee. If you only use the per unit per month cost, you're limiting the budget calculation to that flat rate, which our management fees are based on a percentage of income collected. So additionally, do not categorize expenses as miscellaneous administrative expense that really belong into another expense. So such as office supplies, telephone, training, we need to put those up in the administrative budget where they belong. Next slide, please. So this table outlines some additional common misclassifications, which include ineligible costs such as refreshments at board meetings, cannot be classified as miscellaneous administrative expenses and included in the property's budget. We often find that people fail to provide a breakout of expenses in miscellaneous administrative category and the expenses, miscellaneous expenses and maintenance expense category. You just need to tell us what those funds are for. Similarly, people often do not provide enough specific information regarding the budgeted for contracts. We don't want you to include any reserve for replacement items in your contract number. Do provide a list of contracts and annual cost in your supporting documentation. We don't need all the invoices, But if you can just give us a list of what those contracts are and the annual cost. Finally, please note that entries in account 6723 health insurance category should not include fringe benefits for the service coordinator. All service coordinator expenses and fringe benefits are included in the 1-year service coordinator budget. And then that full amount of the service coordinator expenses end up on line 6900 on the project level budget. Next slide, please. So just a couple more items to remind you about. The minimum capital investment. We see that it's not utilized in the first 3 years of operation. These funds should be utilized before rent increase is approved. We currently have about 100 202 properties that are under construction, and that really applies to them as they come online. Another common error we see is that the sponsor-related costs are included in the project operating budget. For example, if we see the service expenses included that are outside of the supportive services plan. So the sponsor level expenses are not a project expense. Please ensure that you do not include the tenant activity expenses in the budget. Tenant expenses like cable TV, transportation, parties, food, entertainment are not allowed as part of the project income. The only exception to this is the information that is included in your supportive services plan that would be included in the $15 per unit per month for eligible things that fall under the notice that we published regarding supportive services. So finally, please ensure that payables to the sponsor are not included as an expense. Payables to the sponsor can only be paid out of surplus cash at the end of the operating period, and they cannot be paid out of routine operations. Next slide, please. So for reserve for replacement deposit and analysis, another key document to include in the budget-based rent adjustment submission packages, it would be a comprehensive needs assessment if you are requesting an increase in your, requesting an increase in the reserve for replacement account. The CNA will help you right size the deposit amount, the monthly deposit amount to your reserve account. You should include a signed request for an increase by the owner or agent with the submission for an increase in the monthly payment. The CNA should identify the type of repair or replacement as either critical repair or non-critical repair. This type of repair determines when repairs are needed to occur at the project. Critical repairs need to be addressed immediately, while non-critical repairs must be addressed within the next 12 months. Non-critical repair would be longer than 12 months, within 12 months. Okay, so next slide, we'll talk a little bit about supportive services. Housing Notice 2302 was published to provide owners with information guidance on the $15 per unit per month that are available to provide direct supportive services to residents. PRAC properties must provide supportive services for their residents. This is in the regulation. Rental subsidies for these properties are based on the operating budget of the property, which may include the cost of a full or part-time service coordinator. And that service coordinator expense is not part of the $15 per unit per month. That is just the amount for the service coordinator would be in addition to that. The $15 per unit per month for the provision of direct supportive services has to be included in a supportive services plan. And that supportive services plan has to be updated every 3 years. The updated plan must explain how the subsidies support service coordination and describe other funding sources if applicable. Next slide, please. Okay, so Harris, I think we're going to turn this over to you to talk about submission documents for a bit.
My pleasure. And I just want to say, Belinda, thank you so much for that. That was really comprehensive, and really just value all of the we were able to provide. And then I just wanted to quickly note, we are monitoring the chat, and I saw a question. So sometimes people call it BBRI, but so budget-based rent increase versus budget-based rent adjustment. Just the difference is that increase implies that's always an increase, and it's not always an increase. So that's why we're calling it BBRA. Great. So back to the presentation. So now we're going to talk about submission documents. So I'm going to give an overview of some more key submission documents that are located within the BBRA package that you're going to submit. Next slide, please. Great. So first of all, the cover letter. So each submission package should include a cover letter that details the project's needs, funding resources, proposed improvements budgeted, any proposed changes in services or equipment, and why. And within this letter, you should summarize the reasons why an increase is needed and include any necessary increases to reserve for replacement account supported by the capital needs assessment or CNA when appropriate. Also, you need to include the percentage of rent increase requested and the anticipated date of the rent increase, and that should all align with the expiration or anniversary date of the contract. Great. Next slide, please. Okay, and then some additional materials to be submitted. So a copy of the notice that you're sending out to tenants with a rent increase notification, a copy of comments from residents, and owner evaluation of those comments. You also need to include owner certification, the proper notice to tenants on a budget-based rent adjustment and or utility allowance adjustment was provided, as well as an executed copy of the owner's certification of purchasing practices and reasonableness of expenses. And as you can see, both those are found within Chapter 7 of our Asset Management Handbook 4350.1 and Appendix 2 and Appendix 3, and that'll explain how to do those. And then for projects with tenant-based utilities, you need to include the owner's recommendations for any changes to the utility allowance and documentation to support their recommendation. And then you also need to include itemized lists for the following categories budgeted for, regardless of whether an increase is being sought. So regardless of whether it's the same or an increase. So 6390, miscellaneous administrative expensive, 6590, miscellaneous operating and maintenance expenses, 6790, miscellaneous taxes, licenses, permits, and insurance, 6890, miscellaneous financial expenses. So all those miscellaneous categories. For example, if the owner claims a total of $1,000 in line 6390, each expense within that $1,000 must be itemized. Great. Next slide, please. Okay. So now we're going to talk about utility allowance adjustment requirements, sometimes also called UAs. So in properties where tenants pay utilities, so there's tenant paid utilities, not owner paid utilities, the owner must submit an annual analysis of the project's utility allowance, and any allowance changes are effective on the rent date, effective date, or the contract anniversary. And that's per Housing Notice 2015-04. So if the utility analysis results in a decrease in utility allowances to the tenants, owners must follow the tenant notification procedures in 24 CFR Part 245. There's the same procedures for a rent increase. And the notification procedures, just to quickly summarize, are that 30-day notice must be provided to tenants if their utility allowances are decreasing, and that the decrease in utility allowance doesn't change the total tenant payment, but does increase the tenant rent. So owners must establish a baseline utility allowance for each bedroom size for every 3 years. For the 2 remaining years, the owner agents may perform a factor-based utility allowance based on the published utility allowance factor. So that's a standard factor that HUD publishes. Next slide, please. Great. So now moving over into our baseline analysis for utility allowance. So in order to complete a utility allowance analysis, owners and agents must request utility data from their utility or sample a set number of their tenants per bedroom size. So per each of the different unique bedroom sizes within a building. And Section 6 of Housing Notice 2015-04 details the sample size requirements. And just some key things to kind of point out, emphasize. So if buildings are identical, you're allowed to use utilities from only one of the identical buildings. In buildings that are not identical, samples need to be done per building. Also, you need to determine the average utility cost per bedroom size. And in order to access the data that you need to sample tenants, owners may require tenants to sign release forms for utility data. And per the HUD model lease for subsidized projects, households must provide utility documents requested by their owner agent. Great. Next slide. Okay. And now the factor-based utility analysis. So for the intervening 2 years, so if it's over 5 years, year 2, 3, and then year 5, for utility allowances may be adjusted by the HUD provided UA factor, and the owner agent should compare the adjusted utility allowance to paid utilities for the past 12 months. And if there's a significant disparity, the owner and agent should complete a baseline analysis. Just check that out. And these factors are published by HUD and can be found at the HUD user website, which is linked and will be sent out after this call. And then as a reminder, owners must establish a baseline utility allowance for each of the different bedroom size, and they must use real tenant data to do so. Great. Next slide, please. Okay, so now we're going to talk a little bit more about tenant comment procedures. So that was relevant for our rent increases and for utility allowance changes. And again, back to our handbook, chapter 7, section 2. So if the proposed rent is greater than the property's current maximum allowable rent potential, the owner must notify residents of the proposed rent increase. And then you need to make all the information used to justify the increase available to tenants or their representatives to review or copy for 30 days following the date of the notice. And you must allow residents to submit comments to the owner or HUD to review and evaluate this proposed rent change. Great. Next slide, please. Okay. So additional documentation to be included. So BBRIs are prepared by owners or management agents, often with support of site managers. An explanation of the budget workbook and supporting documentation is required in a BBRA package for line items showing an increase of more than 5% or $500, whichever is less. So whichever is less out of 5% increase or $500 increase. New line items not included in the prior year budget also require an explanation, as well as supporting documentation, as well as explanations for any expense reclassifications. So some examples of supporting documentation would include a current list of contracts and data from the past 12 months, invoices, bills, or estimates obtained, a dated notice of an increase from utility company, insurance provider, etc., as well as an analysis and backup documentation of how the projected expenses were estimated. Great. Now that we've covered documentation, I'm going to hand it back to Belinda, and she is going to talk about the PRAC calculation budget worksheet.
Thanks, Harris. Okay, so now we just want to give you a little bit of exposure to how the calculation of the rent potential will work with the budget worksheet that we will provide you. The use of the PRAC rent calculation spreadsheet, which is under the second tab of the Excel workbook HUD created to calculate the annual rent potential. Next slide, please. So we will use the PRAC calculation spreadsheet. So we've already talked about the benefits. So let's go on to the next slide. Okay, so this is an image of the rent calculation worksheet. In this section, you're going to enter the project name. The items that are in white is what can be entered. So the project number, FHA number, the section of the act. In this case, we're looking at an 811 project. All 202 and 811 projects are nonprofits, so the nonprofit question would always be yes. And then under the management fee blank, you'll see that the percentage in this case is 7.92%. That is the residential management fee that has been approved on the management certification HUD Form 9839A. And it's found in section 1 on the very first page of the management certification. Down in section 1 is where that management fee percentage is. And then you will also enter the previous contract rent potential that's on the rent schedule, Form 92458. And the vacancy percentage will equal 0. And you will enter the balance of your residual receipts account. Next slide, please. In box C of the rent calculation worksheet, this information is pulled in from the information we entered in the budget worksheet. It pulls in the total amount of allowed expenses from the budget worksheet, which is the cost of the operations, which is from column J. It also pulls in the amount of the management fee, the account number 6320 in column J, and it subtracts this amount from the allowed expenses. The reason that subtraction is happening is because in the next step, we're going to add it back based on the percentage that you put in the box A. So it will also pull in the amount of the reserve for replacement account that is listed on line 102 of the budget worksheet, just under total cost of operations from column J. And in this case, it's $20,700. Then it calculates the total cash less management fee. And this is an important calculation in the rent determination, as the management fee will be calculated and added back in the cost of operations in box D and E. So let's go to the next slide, please. In box D, calculates the management fee factor and will be populated with the authorized management fee percentage from the top of the form, and then for the vacancy percentage of 0% to equal the new factor of 92.9208. Next slide. In box E, we are going to take that rent potential that was found, total cost of operations, that was found in box C above, and multiply that by the management fee factor from box D, and we will come to our total cost of operations. And in this case, the amount of management fee that was calculated based on the percentage was $11,176. So let's go on to box F. And this is where we get the new rent potential in box on line 1 there, rent potential. This amount will cover the expenses on the budget worksheet in column J, line 108, total cash requirements. In item 2 is we're going to subtract any other income. This amount would be pre-populated with the amount on the budget worksheet from column J, total other revenue. In this case, there was $100 for laundry and vending from account 5910. And item 3 is the authorized potential. So this is the amount that's going to, the authorized potential equals the authorized rent amount minus other income. Other income is subtracted from the rent potential amount to come up with the authorized contract rent potential amount. This is the amount that will end up on the new rent schedule. The monthly, we divide that number by 12 to get number 4, which will be the contract rent potential. And we divide for number 5, the percentage of rent increase is calculated by taking the authorized contract rent potential from line 3 and dividing it by the previous contract rent potential in line 4. And in this case, we're going to have a 3.63% rent increase. So next slide, please. In box H, we'll calculate the rent computation. We'll enter the current contract rents by bedroom size on the first line in white. That's what where we can make our entry from the current contract rent that's off the rent schedule. And then the factor is applied. The rent increase factor that we just calculated is applied to get the new authorized rent. And in the annual rent potential, we will add the number of units, and that number of units will multiply by the authorized rent above to come to the new rent potential for annual rent potential for the property. Okay, so next slide. And this table allows us to complete the utility allowance information. In this case, there was no change in the utility allowance from $76. These are both entered fields. There's no calculation, so it's going to be based on the utility analysis that was provided if we're in year 1, and then for years 2 and 3, the amount that was increased by the factor. Oh, yeah, so bring up the live. Can you make it just a little bit bigger, Becca? There we go. All right, so we started up at the top and filled out the project information, came down, the income expenses were pulled from the budget worksheet, less the management fee plus reserves. We got our authorized management fee from the top of the form to calculate the amount of management fee based on the percentage to get our total expenses of $141,161 minus the $100 for laundry and vending. And we have an amount here of less reserve for a place, residual receipts available for offset. I think the spreadsheet's been tweaked a little bit since this example was created, and that amount is no longer on the spreadsheet in this spot. We're going to talk about that in just a moment. So under our expense number, in this case was 137, or rent potential is 137,016, and the number of rent, the annual rent potential down in the table below worked out to be the same amount of money, 137,016 for the 10 units. Will you go down just a little bit more? Then we have utility allowance. And then the last part of the calculation worksheet talks about the residual receipts, PRAC, ERR termination payments that are due to HUD. In this case, there was a residual receipts balance of $4,000. $250 per unit is $2,500. And the property would need to pay HUD $1,500 at point of expiration. They would send that payment to pay.gov, and your HUD account executive should direct you to make that payment. Owners are allowed to maintain $250 per unit of residual receipts for residual receipts type cost, and anything over that amount would be due to HUD at the point of expiration. So let's go on to the next slide. We're going to talk a little bit more about the service coordinator budgets to kind of give you a little bit more information as you're preparing that one-year budget for the service coordinator. This section will cover supportive services and service coordinator budgets for the property, and this only applies to 202 projects. A service coordinator is a social service staff person hired or contracted by the owner or the management agent for the multifamily housing property for the elderly or persons with disabilities. The service coordinator plays a critical role to support the assisted housing as a platform for financial security, physical security, social connections, and the delivery of long-term community-based supportive services. So next slide, please. When you're creating your service coordinator budgets, the 202 PRAC developments may request to include expenses related to service coordination in their operating budget. If the project has an approved service coordinator, the service coordinator budget must be included as part of the rent increase request. So you don't just do it on the first year when you add the service coordinator. You have to do the one-year budget every year to show the actual costs related to the program. So an owner and agent must complete the one-year budget form 91186A, detailing the program costs, the total amount of which will correspond to line 6,900 on the project budget. You can see Handbook 4381.5, Revision 2, Chapter 8 for allowable service coordinator program cost. We also have some resources on HUD Exchange that there's some trainings that go through how to evaluate your needs for service coordinator program. And there is training for what the service coordinator does on a routine basis. So it's a great resource for existing service coordinators. And the service coordinator budget, the 91186A, is also there in an electronic format that can be used as you prepare the one-year budget. So I think that's where we're going to start next on the next slide. So the elements of the service coordinator budget would list the number of properties, number of PRAC units, and number of persons served. So a lot of PRAC 202 PRACs are small projects, and they don't have enough. One project alone may not be enough. It's a 20-unit project, might not be enough to support a full-time service coordinator. So a lot of times sponsors will share the service coordinator between multiple properties. So that's what that one-year budget has helped doing, is determining if that person is a shared staff resource between multiple properties and how their cost is split between those properties. You would show your the personnel, hours, salary, and fringe benefits, the number of hours for quality assurance, program evaluation, and training, the travel costs, supplies, and materials, funding sources, and amounts. And that also includes training for the service coordinator. Next slide. All right, so this is what the electronic budget looks like that is on HUD Exchange. And do we have that one to open up electronically, or is this all I think maybe the next slide is has the amounts filled out. So on this budget worksheet, you will list the salary information for the service coordinator, the rate per hour, the number of hours, to determine the anticipated annual cost. In item 4, identify all funding sources. So you'll see across the top there, the first line that's yellow is MFSC grant. 202 properties, PRAC properties, are not eligible for the MFSC grants. Only Section 8 properties are eligible for those grants. And that's because 202 projects can include it in your operating budget, and we just include it in your rent. So we don't have to get grant funds for this, for your program, which is a real benefit to be able to have this staff person in your property, because it streamlines the process. But you may have residual receipts funds that could be used. The next column is residual receipts, and the column after that is rental assistance or debt service savings or other sources. So you could have an outside source of funding that would be used. In the next section of line B, you would include fringe benefits, list the insurance costs, taxes costs, retirement contributions. And the next line C is the cost for quality assurance. Then training is line D, and then travel is line E, supplies and materials, and other direct cost. Next slide, please. Oh, okay. So before we get to next steps, the budget summary. So I guess we'll go ahead to go on to the next one. Oh, that was the budget summary. The electronic 91186A will then calculate the grand total of expenses for the service coordinator. The total cost of the program that is calculated on the one-year budget will be included again on line 6,900 of the project operating budget. Now, if you are also including the $15 per unit per month for supportive services, you're going to add that to your amount that's on your one-year budget for the supportive services that would be aligned with your supportive services plan. And I would encourage you to go out to HUD Exchange and investigate the resources that are out there regarding the service coordinator program. we've got some really good stuff out there to help support it. All right, so next steps. So some of the next steps that we will take in preparing submission of your budget-based rent adjustments for 202 and 811 projects. Owners and agents will submit their budget-based rent increase packages 120 days prior to the anniversary date or expiration date of the PRAC contract to their local HUD office through their incoming email box. Each regional and satellite office has an incoming box. I'm sure you all are very familiar with them because you would submit other things through this box for action by the HUD staff. The HUD account executive will review the information provided and evaluate the submission. They will communicate with the submitter on any questions that they have and if there's any additional information needed. The HUD AE will make a final determination of the rents and will then send the owner agent a rent increase approval letter and a PRAC renewal if you are expiring, if you're not in a 5-year term. They will generally request the owner to complete the rent schedule, the 92458, and return it along with the signed PRAC contract. Note that the owner will be required to provide the UEI, the Unique Entity Identifier, from SAM.gov on their renewal contract. This UEI must be updated annually with SAM.gov to remain active and is required for HUD to be able to enter your PRAC contract renewal into our accounting system. So please, please work to maintain your SAM.gov registration. Once the PRAC contract and rent schedule are signed by the HUD account executive, they will send the PRAC renewal with the UEI number to our accounting center, and they will enter it into locks. Our goal is to complete the review and approval, including the signature process of all documents prior to the anniversary date and or expiration date of the PRAC contract to ensure that there is not an interruption of payment to the property, because timely payment of rental assistance is very important to your operations. Okay, so now I think I'm going to turn this over to Harris, and we're going to try to address some of your questions. We have maybe about 12, 15 minutes to be able to answer questions.
Yeah, exactly. So thank you so much, Belinda, again. And, thank you to everyone for sticking in there and listening to this presentation. And so we only have around 10 minutes to cover questions. There are a lot of questions. As a reminder, you can put them in the Q&A box. If you put them into the chat, we're not going to be able to answer them. So just make sure you hit the 3 dots and put them in the Q&A. And if we don't get to your question, we will be submitting an FAQ or a list of questions and answers after this call. We'll try to do that as soon as we can. And just as quick note that all the information will be up on HUD Exchange as well. And I did want to take a couple of questions before I start asking Belinda to answer. So I saw some questions about why they have to submit the rent increase even if tenants aren't paying more rent. So that's a regulatory requirement. It's a legal requirement. It's in 24 CFR 245. So that's why we need to do that. And then I believe there's also a question about rent comparability studies and also about markup to market. So just to note that this is a presentation for PRAC projects, not for Section 8. So 2028, that's different program than the PRAC program. And so RCS, the rent comparability studies, and markup to market, those are terms that are thrown about a lot when we talk about Section 8 or HAP contracts. Great. Okay, so let's see. There was a lot of questions about the CNA. So sort of what is it, who does it, how does it work? Can you give a little bit more color about kind of how that works?
Yes, so a comprehensive needs assessment is going to look at all the capital items on the property and determine the age remaining in your roof and in your parking lot. The bricks and sticks, the things related to what we would allow from the reserve for replacement account, your appliances, what's the remaining useful life on your appliances. all of these things come together to what we're trying to do with your reserve for replacement account is fund what you need based on the remaining useful life of your building and when those items have to be replaced. So a CNA is going to look at 10 years to 20 years down the road on when those major items need to be purchased and what reserve for replacement payment do we need to be making to ensure that we have the funds available to deposit them into the reserve for, or to be able to pay for them when it's the time is to come to replace the roof per se. So generally those are done by construction analysts out there in the industry. And we do have a CNAE tool for electronic submission of this report. And there is published guidance on that. And I believe we also have that on HUD Exchange. So that is something we can build into an FAQ to give you some resources on how to find more information about the CNA process. But at the time you do your rent increase, if you're wanting an increase in your reserve, this is the time where you would submit that CNA.
Great, thanks so much. And can you talk a little bit about how long those last for? Some people asked if it needs to be for 20 years or 5 years. Sort of how does that work?
I think we at least want 10, but between 10 and 20 years is what we're going to be looking at. So
great, thank you. And then again, there's a lot of questions about the vacancy factor. So
yeah, I thought that would be a hot topic.
You guessed
it always
right.
Is. Especially in 811 properties that have had some issues with occupancy regarding homestead. This is an area that the department's currently looking at for 811s. But the current handbook, so when Jess talked to us at the beginning of the presentation, she talked a little bit about the reserve for, or the rent increase chapter is under revision. So when that gets out on the multifamily drafting table, that is your opportunity to talk about whether a vacancy percentage should be allowed for 202 properties. Depends on how that final chapter is written. The current handbook guidance says PRAC properties are not eligible for a vacancy factor. But if you want to provide input to the department when that's published on the drafting table, that would be your opportunity to give us your position on that.
Great, thank you so much. Yeah, and I saw a lot of questions about the status of the guidance. So, right, we are working on new guidance right now, as Belinda said. I did one more question about the CNA. So, the cost to complete the CNA, are those considered a miscellaneous or an admin expense, or kind of where should we expense those? So,
I'm thinking that they can come out of the reserve for replacement account. This is something that we probably want to give a formal written answer on. I haven't been in the field office for 4 years, and I don't want to give an inaccurate answer. So let us give you that answer in writing, please. But it would not be the cost is not an operating cost. It would be an owner cost as opposed to an operations cost. So let us see if we can allow it to come from the reserve account.
Great. And then there's a question on, can you just, I know you covered this, we can touch again, where the service coordinator costs go for 202 PRACs.
Where they go on 6,900. So you're going to do the 1-year budget worksheet, and then the total that you get on the property, if you're not sharing your service coordinator with other projects, the total expenses are going to be taken to line 6,900 on the operating budget.
Great, thank you. And then can you just confirm about service coordinator and social services budgeting for 811 PRACs?
So at this time, the department has not allocated funding for service coordinator for 811 projects. When the 811 properties were developed, they agreed to provide supportive services for their population. This is an area that is being evaluated also. And so you will see some changes going forward. But at this point in time, it is not an operating expense for an 811.
Great, thank you. And then more operating expenses questions. So can operating expenses include capital items that must be funded from operations due to insufficient reserve balances? So the insufficient R for R account.
Unfortunately, no. The way to fix that situation is to do the CNA, the Comprehensive Needs Assessment, and to get your reserve for replacement payment increased. Now, if this is a 202 property that has immediate capital needs, you might want to consider a RAD for PRAC transaction where you can convert your project to a RAD property through the recap program, and that would develop funding to create a capital for the immediate needs that you have if they're excessive. If operations cannot handle the cost of repairs that you have, you really need to be considering a refinance through the RAD for PRAC transaction.
Great. Thank you for that. And then, so in order to get that $15 per month, per unit per month supported services, do you need to have a service coordinator, or can any property? You do, okay.
Yes, that housing notice directs you. You have to have a service coordinator in place because they're the ones that are going to oversee the supportive services plan and ensure that the supportive services are adequately provided to the residents. Because it's not just the owner deciding what those supportive services are that they're going to provide. You have to do a survey of your residents to determine what their needs are, because one community may have a need for supportive services that another property may not have. So we encourage owners to do a survey of residents to find out what their needs are. You could have a population that's in their 80s and then they need more support for things than if you have a younger population in the early 62, 63 range. Those residents may be more active and may not need the same level of supportive services for an older population. So it really is just going to depend on who is living at that property.
Absolutely. I'm going to take one last question. And like I said, we will really do our best to get an FAQ out, questions and answers based on the ones we weren't able to get to. So there's a couple of questions about contract length, just which ones are 1 year, which ones are 5 year. If you can just touch on that, the differences between 202 PRACs, 811 PRACs.
So all 811s are currently being renewed for 1 year. We do have authority to go up to 5 years, but we're going to implement that in 2026. We're currently working on implementing 5-year terms on 202 properties, 202 PRACs. So we started 2 years ago, and we'll finish that up in 2025. And so all 202 properties by the end of 2025 will be in a 5-year term, somewhere in the 5-year term range. And then 811s will start in 2026. But we're gonna reissue the guidance, so you'll get formal notification of that.
Perfect. Great.
And it's one little thing. It's all based on annual appropriations. So I say that because your budget processing is what tells us how much money we have to ask Congress for to keep this program going. If you don't renew your budgets on time and keep them renewed, not expired, we cannot properly budget for the needs of the program. So I encourage you to complete your PRAC renewals on time and to work with your field office staff to get those renewals completed, so that we can accurately provide for the program going forward.
Great. Yeah, and I think that's a really great note to lead it on. That all this is subject to annual appropriations and the importance of submitting budgets on time and accurately, and really connecting with HUD staff with questions. Great. So we're going to close the Q&A, and I'd like to thank Belinda for taking the time to be with us today. I want to thank our partners in ICF for helping us run this webinar, and also thank Jess Jackson for her wonderful introduction. And if you'd like to learn more about the resources discussed during this presentation, please check out the training page for this webinar. You can also find links on the attachments to this slide. So the slide that you see on your screen right now. This deck and a recording of this webinar will be made available on the HUD Exchange shortly. And that concludes our webinar. Thank you, everyone, and have a great day.
Thank you.